When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, Big Beat on Wall Street. Let's filter the future live.
Good morning from live from Las Vegas, Nevada. How is everybody out there? Look, there's a lot going on still, but the question has always been, and it will be about the FOMC meeting this week. Now, Howard and I are both in Las Vegas this week for the Prosper Trading Academy's big live event here in Las Vegas. Howard will be with us. He's traveling right now, coming to Las Vegas, but should be here a little later this afternoon as we get prepared for this meeting. All right. Look, the markets are saying to me two things. They're just still scared. Looking quickly at Bitcoin 91,400 as hit 92,400 over the weekend, and as soon as the U.S. markets come up, it's the U.S. that's just nervous. It's not international. It's nervous. Why are we more nervous? Because we are worried about what the Fed's going to say. And it becomes pretty obvious that weak hands are still in the markets, and we understand that, right? But what we're seeing is, and you saw China over the weekend have their biggest exports in history as they now are able to export again in the United States, and things are moving along again. Should be that, but there's still supply chains issues around the world. So those supply chain issues are still prevalent. Look, being in Las Vegas over the weekend, I can tell you that the economy is being affected by tariffs, and they're being affected by these ICE raids, as travel from Canada, Mexico, even Asian countries are really down here in Las Vegas. The U.S. economy still seems to be ticking along, but not at the same level as normal. So there is effect going on here, and we'll see if that continues to stay prevalent, or does it change over the next 6 months as we look at the economy. All right, so let's get to it. We're still looking at Disney and Warner Brothers and Netflix and Apple, all the streaming companies that are out there, and of course Amazon. When I'm looking at the streaming, the question that had to be answered in a lot of ways was whether or not that this was a good deal for Warner Brothers and Netflix, and why. I mean, I've been talking about it for a long time, right? That the question around streaming is kind of a question around the economy. And we've said this, I can't tell you how many times, expect mergers and acquisitions to be hot and center, full front, and it's still going, right? We're not even slowing down on this M&A, and so much so that there's a big question mark around whether or not there's too much M&A, right? And are they pushing the boundaries? And because of that, obviously, Netflix has to get rid of some of the streaming networks that Warner Brothers has, maybe some of the ones that aren't as profitable, and keeping some of the things that are profitable. I like the fact of CNN and all that, but they're going to create a new one called Discovery Channel. So it's going to be like a whole um, group that they're going to create. And I think that's very cool, separating them out of the streaming side of things. But Netflix making a smart move here, especially in the sports side of things. I think that's also a smart move too, as well. Sports is still pretty popular out here in Vegas. I was here watching some of the football games a little bit on yesterday. And it was jam packed in Caesars, jam packed in Wynn and Encore at the sports book. So uh, it's pretty clear why these prediction markets and why the sports gambling is starting to intertwine into the stock market. Question mark is, will Vegas and those places, will they accept that? The finance side of things, will they accept stock market quotes on their walls, right? So there's going to be some linkage, I think. But we just see now that Paramount Skydance is launching that hostile bid for Warner Brothers. So Barbarians at the Gate. If you don't know the movie or there's the book, I extremely expect you to watch that. I expect that to happen. That was a question mark around Nabisco back in the day, where you probably don't even know Nabisco anymore. Um, and that company was nutty. Uh, when you look at mergers and acquisitions, it's becoming very obvious that this is a great time to do mergers and acquisitions. It might not be a very good time come at the end of next year, right? As rates come down, and these companies that are doing the big M&As are the ones that have cash. And I've said, watch those companies. Those companies with massive cash flow, massive cash on the sidelines, are going to be the ones in the forefront of this, right? Because they're preparing to buy things and to do things and making big moves. And we're going to see the market seem to be a little bit more quieter as we move into the future. um, Same thing with AI, right? We talk about AI. Is AI dead? No, AI is growing. They're spending, and ChatGPT said the other day, they're like, Sam's like, well, we've got to move into the future. I mean, it's code red, right? So when you see mergers and acquisitions, when you see AI, when you see technology, all of those things start to come together. We're going to see a different world, and we need to make sure as traders and investors that we're a part of that world, right? That we're not just willy nilly in and out, in and out, in and out, in and out. That's a great way to lose your money. I mean that trading. Look, let's be honest. Retail traders, and I know they don't want to hear this, but 80% of traders that trade just in and out all the time usually get burnt, right? It's 80 to 90% lose their money, right? We don't want that. We want you trading for sure because we love to trade. It's what we make extra money, right? But you also need to learn how to invest, and that investment. And we don't want your trading to become an investment. What do I mean by that? Well, sometimes you make trades, make bad trades, they become your investment, right? They become part of your portfolio, which is okay. Nothing wrong with that, especially if you got good companies and maybe it went to a bad situation. Good example that'd be UNH, right? Good company went to a bad situation, is coming back, right? I saw CRISPR. I mean, I'm in a big call on CRISPR that I think CRISPR Therapeutics, good company, been beaten up. Costco, good company, cash flow, been beaten up. So I would tell people to be careful out there. Don't worry about sometimes the trading that you got to make your money. I've made more money this year in just investments than I have in trading, and I've done very, 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 very well in trading. Right. So I really just kind of want to make sure that people out here aren't just trading. 'Cause if you're just trading, you're going to get in trouble. And I think that's part of it here. All right, give me some calls out. So I am watching the markets here. As most of you know, I don't have my big setup that I normally have. We got my watch lists ready to go, things that I'm watching. We are going to see a little bit. The dollar's still slipping here. Silver still not moving higher. As most of you know, I dumped last week all of my silver. The thesis is still the same, right? The thesis hasn't changed, but what has changed is the speed of the price going up. Look, there's not enough silver to cover all of the paper out there. But as paper starts to come down a little bit, I think silver will too. I will be buying my silver back. Okay. And interestingly enough, I came out here to the rodeo. I did not expect to come see the rodeo, the national rodeo conference, and it's their big, world champion. And I bought a belt buckle. It's for fun, right? It's in silver, right? Silversmiths out here. Look, it's still the same, right? There's still a need for silver. There's still all that fun things that are going on. So we don't see a change in silver's thesis. I do see a change in thesis of the price. Gold silver ratio still one of the highest levels ever. Still, so there's still that. But I'm not seeing it in the derivatives right now. The derivatives are starting to dry up a little bit, and that's different. But you heard from Peter Thomas Friday that their countries are still buying gold and silver, still big rates, right? But was it enough to move the price? And I don't know that that's the case right now. I think we're going to see a pullback a little bit. Peter and I talked about the pullback a little bit in silver prices, and then we'll be buying it back. That's what trading is. That's what investing is. Do you see how what I mean by that? Trading means that I took the price from 19 to 58. That's trading, but it's also an investment, right? And I'm going to wait. I'm going to wait till it comes back. And then when it comes back, I'll get back in. And I'm excited about that. I'm expecting to see Steve Flanagan talking to us about the dollar and currency. He's coming in a little bit early today as Howard is out. He's going to be here around 9:45 Eastern if you're there. It is 6 o'clock in the morning here in Las Vegas, Nevada. We're 3 hours behind. So I am getting a good bird's eye view of what's going on in the markets. I'm getting a very good eye view of what I'm thinking people are saying. Good morning, Zora. I will. There you go. Good morning, Zora. Yeah. Also, kind of looking at the markets in general, people are still nervous. We talked about that this morning, early part of this morning. Um, Look, there's a whole thing going on right now, right? And when I look at the question mark around the markets, how nervous are really people? How nervous are investors? How nervous is institutions? How nervous is retail? Um, we have found that the retail's been kind of wrong. Oh, the retail's been right. The retail's been right. I've heard that so many times, and they've been getting it wrong because the retail's been using zero DTEs, and institutions are taking that money. They've been taking that money all day long. They're nervous. That's right, Zora. Yeah, and show. There you go. They're nervous. Yeah. I mean, when I look at the markets, why are they nervous? I have to understand the thesis behind all of that. Steve Flanagan now coming in saying he is, we'll see you soon. Yeah. Why are they nervous? What's making them nervous? Right? I have to understand that as a trader. As a trader and as an investor, I got to understand why. When people ask me all the time, well, Big B, what should I be looking for in the markets? Okay. Psychology. I've said this so many times. Psychology is literally the biggest thing in the market. Now, well, Big B, the markets are built on a machine. That's correct. And they're not nervous. They don't care. So there's no psychology. Your psychology is how the algos are traded and how investors are thinking, whether that's institutions or whether that's retail. Okay, so let's break that down. I'll do the algos last. I'll do it from the institutional side first. The institutions are not as nervous as you are, right? Why? Because the markets are actually up. I've said this on Schwab not too long ago, right? Where's the markets going to go to the end of the year? Sideways? Not more higher? Not more lower? Nope. We got the sell off that I called for. We got it. Now you're seeing the nervousness because it's over exacerbated. But the retail doesn't know that, right? So institutions are like, well, guess what? It's the end of the year. I've got to be invested. And guess what? November was fun for us. We took all of our profit and took advantage of the zero DTEs. Okay. That's what's making retail nervous. Retail is nervous because of price. Retail is not nervous because of the other way around. Okay. Retail is not nervous because institutions are happy. I don't understand. What does that mean, Big B? All right. I'm going to break it down for you. The institutions have one job to make money. All right. In order for them to make money, they can't be sitting in cash. All right. So they have to see where alpha is. In November, they found it because the why? They created it. They created the sell off. And the zero DTEs and the retail traders were shorting and losing, to be honest with you, because there were a lot of people that were still long. That's what it took. They took all of that money that was long and took advantage of it. And they're buying back. And they're buying back stock that they think that was beaten up. And we took advantage of that. Costco beaten up. Netflix being beaten up. Why? Because of a deal. That's silly. They're becoming a bigger company, right? Why are the nervousness? Why? 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 Well, because quite frankly, retail does not know what they're doing. They're following. They're following news. They're following price, and they're not keeping up. And then institutions are setting the precedents. Don't believe me? Look at the whales in Bitcoin. Look at the whales in crypto. They told you. They showed you. Whales were still buying. Institutions were buying. I heard so many times, we're going to 50,000. We're going to 75,000 in Bitcoin. All right, maybe. I don't think so. I think we're going to go right back up. Why? Google, Nvidia, beaten up, huge beat up. Guess what? Warren Buffett bought Google. Why? He was beaten up. Why? He had a thesis. Why? He had cash. Why? He's institutional. Is it all making sense? If it's not, let me know. I'm happy to explain it to you. But that's what I'm trying to do. I'm trying to give you a chance to catch up. I'm giving you a leg up. Quasar Markets gives you the news. We create theses here. We build on those ideas. And when we do, and when we suss it out, and we do all those things, we get a better idea, a better trade, a better investment. And that's what I want to make you. I want to make you a better trader. I want to make you a better investor. I want you to do it to see how I hit 143 times in a row. That's crazy, Big Beat. Not really. I want to be 500 times, but it's not sustainable, right? I have to make very smart decisions and moves. And I do that trading here, right? I watched the market the other day getting crushed in Netflix. Kaboom, straight down. Guess what? Bye-bye. The information, the fake news channel, came out with fake news on Microsoft. I screamed it out loud on this show. Hey, don't believe them. Don't believe them. No institution believes the information. Killed it. Killed it. Crushed it. Crushed it. Crushed it. Why? Because that's institutional knowledge that I want to give you, right? And Microsoft went right back up and fast. Had you bought those zero DTs on Microsoft, you probably wouldn't have to listen to me anymore because you probably killed it, right? You're already done to the end of the year. So when I look at the next level of the markets here going into the end of the year, people have been asking me, are we going to have a Santa rally? Are we going to push higher? Yes, we are. Yes, we are. Yes, we are. Oh, I don't know, Big Beat. I don't know. We're all nervous. All right. Saw Einstein on CNBC the other day. Are we going to have a Santa rally? Yes, we are. Why? He laid out all the reasons that I'd already been laid out for you, right? Because we have institutional insight. We know. We know what's going to happen, right? And no, this is not Santa Claus rally does not happen now. It happens after Christmas, between Christmas, the end of the Christmas, all the way to uh, first week of January. Okay, so I want everybody to be prepared, right? Institutional knowledge, being prepared, making you an investor. Get it? Catch on? Great. There is a couple stocks that I am looking at this morning. I'll keep my eye here on it. But right now, I am keeping my eye on Boeing. Boeing back over the $200 handle, interestingly to me. And we've been talking about it a couple of times here. I do like Royal Caribbean again. I know I number about RCL for a little while. We've had that sell off that I liked, getting back to that price range again. I am watching AMD this morning, and I think a lot of people have been asking about it. But Nike, I wore Nikes out yesterday. I was running around. I have several different pairs of shoes, depending on what the thing I'm using them for. But Nike seemed to be on everybody's feet. I was watching that here, keeping my eye on that too as well. Um, I am watching Berkshire Hathaway their changes are running around. Howard asked me about Berkshire Hathaway. I'm starting to get there now. Warner Brothers right now is WBD now up almost 7% as Paramount making that hostile bid. So for those of you, and guess what? I was talking about WBD 3 weeks ago when I saw that there was some movement, some buying going on, some movement. How'd you know, Big Beat? Because I have it on my radar. I know what's going on. I watch volume, right? Volume's important. Volume tells you what price action is doing. Chart does not tell you what price action is doing. A chart tells you where it's been. Does not tell you where it's going. Oh, but charts tell you where it's going because it can follow a trend and a pattern. Yes, yes. I have a degree in it. I know. I understand mathematics. I've got a pretty good brain up here. I'm a math whiz, everybody knows. But, but, didn't tell me that Warner Bros. Is getting bought out. My chart didn't tell me what the news was. My chart didn't tell me Paramount was making a bid for it. Great. Do you like charts, Steve? I've been charting since, since the 80s. I did it on graph paper and pen. I love charting probably more than the biggest chartists in the planet do. Um, but I don't rely on them. I don't, as I call it, I don't pearl clutch my charts. Too many people are pearl clutching their charts, hoping that that's the keys. God, I love trading view. We're part of the trading view. Quasar Markets as a part of a trading view. We love it. It's not the end of it. I love the news, but the news isn't everything. I love commentary on CNBC and commentary on Bloomberg and commentary, all of that, but they don't set the precedents, right? You don't know what the CEO of a company is going to do tomorrow. We don't know what the Fed's going to do, as my friend JC Perez says. I don't even know what the Fed's going to have for breakfast. I don't even know what I want to have for breakfast. Why am I betting on what the Fed's going to do, right? You need to understand the markets. Have people like Steve Flanagan here, Peter Thomas, that have been in the game a long time, that see the things that we see, right? How do we know that these things were happening? How did I know about Warner Brothers long before it happened? How did I know about Hershey stock? Or because I had the AIs. Now my AIs are helping me build those theses. Technology is helping us. So when I talk about this next level, I want everybody to understand that this is what we're doing. We're building out another level of the markets here. So I want everybody to understand that. I think we're looking pretty good here in the markets this week. I think as we see Powell's speech and I don't really care. We know we're going to lower rates a quarter point. Anybody says they're not, ignore them. The Fed has been telegraphed already. They're already talking about what they're doing. They're talking about the future, right? That's what I'm more interested in. And I think that's another reason why the markets are nervous, right? They're nervous because, okay, great, the Fed's going to cut now, but will they do it in January? Don't know. Will they do it in March? Don't know. I do. I know exactly what they're going to do. They're going to cut. How do you know that, Big B? Because the president's packing the freaking panel of Fed, and he wants to lower rates. No charts telling me that. No zero DTE traders telling me that or showing me that. I'm listening to the news. I'm listening to what they're saying, the Fed's saying. I am watching the charts. So what I'm saying is use all of it. Don't just use one part of it. I'm at a disadvantage today. I have a cell phone and my iPad. I don't have all my big screens. Get that too, so I can watch it all at the same time. I'm at a disadvantage to trade. Don't like that, right? If you're trading by your cell phone and your iPad, that's how you're trading. You're not a trader. Sorry, you're not. You're a hobbyist, as a lot of people call it. It's your hobby. That's great. Are you making money? Maybe, maybe not. But are you really immersed? Are you really doing the homework to make you that trader that makes you much better, much better? I don't know. I don't see it. The other day I saw somebody post a tweet. How's your screen look? Is it one little screen? Is it 10 screens? Or I got 20, right? That's why I have the advantage. I got great software. I have the advantage, right? That's what you got to have. You've got to have the advantage. Oh, do I need another screen? Yeah, you need another screen. When somebody asks me, do I need another screen? Yes. And when your TVs in your house, you have no need for them, repurpose them for you, right? In your office, in where you trade. Repurpose that. Your big screen TV that you don't use anymore because you're getting a bigger screen for your living room, repurpose that screen. Make that your screen. What? I don't need a big screen on my desk. Yes, you do. Yeah, you do. Oh, I don't know. I got my laptop and I've got my phone. Great. But you're not working very hard. Oh, I'm working very, very hard. I heard this the other day. I'm working very, very hard. Oh gosh. What Carlos is asking me, what software to use other than TradingView and which platforms. Carlo, to be honest with you, it would take me a long time to explain all the platforms that I use. I use them all. Yeah. And E-Trade and Wells Fargo and brokerages. I've got most of them already on my system. Again, an advantage. Why is that an advantage? It's a great question. Because IBKR goes down sometimes. Schwab goes down sometimes. And when they do, you're done. If you have one brokerage account, Robinhood goes down. It did the other day. You're done. You can't trade. Twitter goes down, markets slow down. It's true. That's why I always have other things going on around me. I don't want to be at a disadvantage. I also have down detector on all the time, so I know what the websites are going down. I know what programs are going down, so that I know to move fast and quickly, to speed up. All right, I have 5 minutes here going in this. Obviously, Warner Brothers is the question here this morning, as Para is Paramount. They're probably they are probably going to be a question this morning here. Yeah, I'm gonna keep my eye here on Paramount as well. But Warner Brothers now up 6.75%. I still think that the question around Paramount, when you look at the FCC in the old days, right? When I talk about the old days, I'm talking about in the Lena Khan days, right? Um, it didn't matter what company was trying to merge. They stopped everything, and that's not the way that's terrible. That's terrible, and that's why she's out, right? So she can't get a job. But some mergers and acquisitions are good. You know, how many people really are happy about 30 different accounts for streaming? I'm not. That's why company like Comcast did so well. They put all the TV in one place. Now that today sucked because half the shows on cable I don't even watch, so I don't even want to pay for that, right? So I want to see that. I want to see me have the ability to pick what I want. So Disney made a good move for that, right, with Hulu and ESPN. And you can pick the one you like. And guess what? Makes them work harder to get your attention, right? I don't always want to watch ESPN. It's ping pong table in China. I don't care, right? So, all right, we've got literally about 3 minutes now to the open. I am going to keep my eye on the cues this morning, but let's keep our eye. I can't pull up my charts here today. I've got too many things going on, but I am watching that. Another stock that I am watching is Snowflake because, as we all know, Snowflake got beaten up over the last few weeks. So I do want to keep my eye on Snowflake. Snowflake has a huge gap between around 240-ish to 260. So I want to make sure I keep my eye on Snowflake today. Could be a good runner today. I am watching Snowflake. Um, John Deere still getting beat up again. Still down again. Um, uh, keep my eye on a few things here. Palantir at 182.27 now, pushing back up a little bit. I did like the Alex Karp with Aaron Sorkin the other day. That interview was really good. He's a very animated guy, but he was very passionate about his company, and I do like that a lot. Tesla at 455 on Friday, now at 447, down almost 2% here. I do think Tesla's way above its skis right now, so be careful out there if you're in Tesla. CRISPR, mine, up 1.62%. So there is that today as well. And Costco down a little bit here, but Bitcoin getting beat up going into the open here, 91.3 now. We're seeing that, right? So, and of course, we saw MicroStrategy buying over 10,000 Bitcoin. Um, the shorts are getting creamed all day long, and they keep trying to sell. They keep trying to do it, and they're trying to get you to get nervous and give them your Bitcoin because everybody knows where Bitcoin's going. It's going up, right? So I don't, as you know, here for me, I accumulate. So all right. The interview was dope by Market Sharp. Yes, I agree. Between Alex Karp and Aaron Sorkin, I think one of the things and I do like Aaron. If you, I do read the book 1929. He says it's very hard to write for him. It doesn't seem to be that way. I do like his writing. He's very animated in his writing, and he's very animated when it comes to his. Okay, all right. So let's look at QQQ. We'll keep it here in front of me. 627.22. All right. 627.21. Here we are. We're about to open up here on the cues. Sorry about that. All right. 627.08. We are open first to the downside, possibly to the upside. Oh, we're making a little bit of a move here to the upside here. All right, 627.78 here. Still moving here. These hostile bids for WBD getting very interesting here. Netflix now down to 99.04 here. Still slipping a bit. Nvidia now up 2.25 here, 1.23%, so still pushing here. Warner Brothers now up 5.58%. I honestly I think we're getting a little bit way out of reach here for Warner Brothers here. Confluent obviously being up because of the IBM deal, but I think that might be it. I will say that I do like IBM stock here. It is still making highs after getting beaten up back in August, 240 now at 370. So you gotta like that. I just don't like this Warner Brothers run here. It's too much for me. Will Netflix pay up for Warner Brothers? Probably. They have the money. But I do think Netflix under 100 is kind of a. In fact, I think I'm going to buy Netflix down here. I think have not made the move yet. Nvidia now up $3 here. CRISPR Therapeutics now up 2%, so we're still there. I still think it's good down here. For those of you who know, we're still in Costco too as well. Uh, I am looking to buy back in Costco pretty soon, so get ready for that, folks. 891.71 here, down $3 is getting pretty yummy. Warner Brothers up 6.5% here. It's just getting too frothy for me. I would tell people to go look it up. Barbarians of the Gate. That is one of those movies. Books better than the movie, I think, but the movie's pretty good. Um, it'll explain to you how Nabisco, the whole thing went down. It's just uh, crazy, crazy, crazy. I'm looking at Netflix now again. All right. I think she's been beaten up enough today, so I'm gonna go in and buy bet Netflix here. Okay. I've now bought Netflix here. Yeah. So I'm in at 98.03. I'm gonna keep that for a little while. Um, 98.30 now, folks. I got it at 98.03. Bought there on that bottom. We like that. Keep that going. 98.20. I think Netflix is beaten up too much on this deal. Hey, if Netflix doesn't get the deal, stock's going to go by 110. So 98.36. There we go. There you go, folks. If you listen to me, we're already in the money. Big time. 98.44 now. Ooh. I will keep my eye here on Netflix. I like this 98.37. All right, a little bit of a slippage there. Some of this profit taking win at 98.14. So it's heavy trading right now on 98.09. Yep. I think 98 is probably the bottom for this, but we'll keep our eye on it. Because it's not a much this Paramount's deal is not that much better, to be honest with you. And if Netflix has to push up a little bit, anybody shorting Apple, Market Shark's asking if anybody shorting Apple. No. I honestly think that Apple's going to have one hell of a Christmas this year. Because I'm gonna tell you, the Apple iPhone 17 Pro Max has been sell out. 97.90, we broke through the 98 handle there. 97.84, slipping a little bit. Netflix. I'm not scared. I'm gonna say long here. I think a lot of people maybe had a limit order there at 98. They probably broke through that. That's what I mean. Institutions, right? But I don't see a problem here. I don't think anyone's shorting Apple right now. 97.74, 97.68, 66. So slipping a little bit here. All right. Not liking the slippage. I don't like it at all, but I get it. People are, again, zero DTEs, taking advantage. But they're going to get burnt on this one, I think. Not understanding how deals work. I was watching another company trying to explain how the Warner Brothers Netflix deal is working, and they got it completely wrong. Did not understand deals. Got to have more than 2 years in the market. All right. 97.87. Right back up. Should see Steve Flanagan coming in here in about 5 or 6 minutes. We'll be asking him about his quantum convergence theory as he is continuing to explain quantum convergence. I love it. I tasked him with coming up with the new theme, and he's done a really good job of explaining what's going on in the world here right now. 97, 83, 87, 90. We'll get back above the 98 handle here, and it should go right back on up. Yeah. 97, 91. Get back above that 98 handle, and I think we could explode back to the upside. All right, any other stocks out there you guys looking at this morning? Throw them out at me. Revenue on the strip's down for sure, but they're having more events here. We were talking to 97.51. Ouch, there was a sell signal, sell program just came through. I think that sell program is wrong. We'll see. Um, but more events are happening. People want to see more events, and I thought that's the key right now is having events. So Vegas has quite a few events going on this last few weeks. Netflix trying to stretch that trade out. Uh, Net Rosenblatt, there you go. Rosenblatt lowers the price target to Netflix from 152 to 105. I think Rosenblatt's wrong. They usually are. Um, yeah, Trump says Netflix Warner merger could be a competition problem. Oracle's catching a little bit of a bid. I still don't like Oracle. Look, their revenue streams. I gotta understand it. So yeah, but Trump not liking the merger competition. That's interesting. So if they don't get the merger, if the FCC stops it. Um, hmm, then Netflix goes right back up. Don't think that's the case though. Markets are still fairly wonky this morning. Berkshire Hathaway down 1%, now down $5 here. Warner Brothers now up almost 8%. Bitcoin now below 91,000. Yeah, no, it's just weak hands. Weak, weak hands out there. All right, Netflix 97.15 now. The lows of the day down 3% now. Keeping my eye here on Netflix here as I'm about to buy some more on this silly trade here. Um, yeah. Mhm. All right. I've doubled down on my order and 96.93. So I'm roughly in at 97.50 now. There we go. And we're at 97.32 already. This could be a hell of a move here for us. All right, 97.53, 58 now in the money here. I'm gonna stay long here on Netflix here on this double down. I like this double down here. 27.28, 32. It's traveling. I mean, there's no doubt about it. The move here is quick. I see Steve Flanagan and now I will bring him in. Steve
Morning.
Flanagan, good morning, my man. How are you?
Good morning, Steve. It's Fed week, and everybody goes sideways. The market, uncertainty. Everybody expecting a Fed rate cut. Policy drama is now where our focus is.
Yeah.
So, what's the dot plot gonna say? And this is going to be a very interesting week, Steve. From the institutional point of view, you got this week and next week.
Yep.
And both weeks are full of central banks around the world. And then it's Christmas week and New Year's week. Wow. This is, I don't like trading in these, although the opportunities are great.
Yep.
The institutional side, this is where there's just too much risk out in the market to really begin to make a big play because you're only subject to criticism if it doesn't work. So
Yeah, Steve, and
good point.
I was talking about that this morning. I want you to really expand on that thought there. This morning we're talking about the difference between institution and retail. Why is retail so nervous and institutions not really nervous? Because they're prepared, right? So, explain to us, tell us a little bit about the difference right here, right now.
Sure, Steve, you've been hammering the point all morning about your screens and things. First of all, institution has the advantage always because they have data. And that data is they can number crunch data with AI. It can be pattern recognition from technical trading where
Yeah,
you and I learn from X's and O's on a graph paper. But even more important, to your point of the screens, market data that we see is delayed. How much is
right,
it delayed? Maybe a minute, maybe 30 seconds, but it is delayed. They have the greatest and latest technology. Heck, when I was at the main desk there, we were able to execute trades within 3 milliseconds.
right,
That's 1,000 milliseconds to 1 second. So
right,
of course there's a speed advantage and information. They have the data.
right.
Now, Quasar Markets is making a major effort here in bringing this market data in a somewhat real-time space to our other traders, the retail space. So
And that's the
that's
key. That's the key is having data directly from the direct. I mean, so many other platforms have the third party
that's
data,
right.
right? Oh well, it's not delayed that by that much. BS. It actually is. I won't tell them that in their face because they think they know better than me, because I've been in the game so long. But when I look at that data and I go, yeah, you know what? If you're going to use our backend and you're going to be able to attach to it, you can. Um, I want it to be as hot and as fresh as it possibly can before anybody else gets it. Right? That's the key. So yeah, I agree with you.
Steve, you can equate this you're in the town, Las Vegas now, right? Welcome there. And sports betting is huge. Okay, so as anybody who does sports bet, maybe not a lot of people, but a few people, have you ever gone in and said, hey, let's take last night. Hey, I really like Green Bay. I think they're going to make a surge here. It's a tie score game, and all of a sudden you can't put a bet in
Right.
because the delay in your sports betting, guess what? The sports book already saw Green Bay scored a touchdown, but the feed you're getting still shows them lining up to scrimmage.
Yeah.
So that's the type of delay that can be big in many cases, and yes, gives a distinct advantage to the institution side.
Especially when it's streaming. Right. I
That's
mean,
right.
the stream. If you're watching streaming sports, you're already behind. You might as well just stop trading. You might as well stop betting because you're not. You
And
know.
the same thing occurs when you're trading in streaming currencies or in
Yeah.
streaming stocks. There still is a delay.
Right.
That, you know, we used to call that back in the early 2000. Remember, I started working in AI 2014, 15.
Yeah.
So, I've been very familiar with the advent of electronic trading and computerized trading and the advent of AI involved. And in the old days, we used to call that a speed bump between, it has to level the playing field because that person that trades has a distinct speed advantage. Therefore, when they trade, I get a last look. I can look at it and say, is it reflective? You're buying. Is the market still there before I confirm it's done? Yes, that occurs today in the marketplace, but in milliseconds of,
Right.
of, of time where the price maker has to have some sort of level playing field. And sometimes that's a time delay.
Yeah. And when you look at high frequency trading, I mean, those guys have direct access. They're plugged right into the machines, and they don't. What advantage does a retail trader actually have?
The retail trader's advantage is right here. It's up
That's right.
there. It's the brain. I want to, we used to say sometimes you got to raise your head out of the forest to see the horizon and then drop back into the forest and just trade. But you always have to have a direction. So your advantage is The institutional machinery often gets it wrong in the short term because the machines will, look at any of these big sell-off days, and the following day it's back up half. So
Because the
that's
algos don't understand the psychology of the retail.
exactly, and that's
Right.
the advantage the retail guy has. It's right up here. It
Right.
doesn't look to make sense. Now you have to adapt an appropriate
Yeah.
trading policy stance against a tidal wave at times. So you don't just jump in and say, I'm going 100 long, I'm going all in. No, you dabble, you
Right.
establish, you say, it's down 3%. I'm going to take a couple. It's down 4%. I still love it. I'm going to take a couple more. You always keep, as we would say, keep your powder dry
Yep.
for that eventual capitulation where you can step right in. Steve, I hear you often on the show talk about these type of capitulation
Scaling.
moves.
That's right.
The other day with Microsoft, I heard you loud and clear on that one. As a Microsoft holder, I was looking at that news going, whoa, this doesn't sound good. And I heard you, pounding the pay. In fact, you did pound your desk, I believe, that day.
I did. Yes.
But,
look, we knew the information was wrong. That's the company and the information. They're almost always wrong. They get it wrong. And when they do that, they're manipulating because I'm not going to say they're the manipulator, right? I'm not going to say that because may not be true. They might have had somebody out there that really did believe this, but did they really reach out to Microsoft and talk to them? The answer obviously was no, because Microsoft denied all of it and said this is wrong. This isn't even right. Right. So, and they've been wrong a lot, but news gets it wrong sometimes, but not as much as they do. And so that institutional knowledge that I have, I was happy to be able to bring to that the algos didn't care that the data was wrong.
That's
They
right.
use it as if it was right. And that's what you're talking about up here, is using this and understanding the difference. Yeah.
Absolutely. And, manipulation, we all sometimes cry, things manipulate. No way. You can perhaps manipulate the minute or
A
two.
little bit. Yeah, but not
You
much.
can manipulate a trend and where it's going. And that's where the retail guy has a strength over a lot of the institutional.
Yeah, agreed.
I wanted to bring up one of the best trades I can ever offer to the viewers.
Let's go.
This one, I read a little thing over the weekend. They're stopping the penny, right? No more US penny because of the cost involved. It costs 3.7 cents to produce one penny.
Stupid. Yeah.
So let's look at a nickel. Well, if I buy a nickel, I have 5 cents, right? I can sell it, do whatever I want. I'm going to get 5 cents. However, a nickel's intrinsic value is 75% copper, 25% nickel, and that comes out to present market of about 8.5 cents. Now, it is illegal to melt down a currency. You cannot do it, cannot melt nickels down. However, it's an interesting idea. It's worth 8.5 cents, but your downside's a nickel.
I was just when I went to go deliver my silver to the company, they had lots of coins. You're finding out that people that do trade gold and silver physical, that they also have coins too as well. And I'm hearing a lot of people talking about they're going in grandma and grandpa's closets and their old mason jars full of old coins and copper pennies and wheat pennies and Lincoln pennies and Indian head pennies and those kind of fun things, and starting to bring them to those coin dealers.
Yeah.
Is that telling me the world's not good either?
No, what it's telling you is that, suddenly the Indian head penny, which is, got a heck of a lot more copper content, has got value suddenly after 100 years. I'll just bring COVID, and the idea of, holding coins. When COVID came out, I worked for 43 years commuting from Long Island into the city every day.
We're hearing reports that there's a tsunami warning issued off the coast of Japan after an earthquake here. Big tsunami warning. Go ahead, Steve. Start with that.
So, and I remember every day I'd get home, I'd reach out of my pocket and drop my change into a coffee can.
Yep.
When COVID hit, all of a sudden I started to see signs on Long Island, all these places need coins. And, I got up there and I would bring in a can of coins and guys would give me a premium for it. It was about $200 in a can of coins, and they were happy to, give
Hmm.
me a nice premium. But interesting, just a real life experience about having coins. And but we are moving, Steve. I thought maybe you saw, the SEC chairman over the weekend predicting that the entire U.S. financial market could move to a blockchain tokenization in the next 1 to 2 years.
Yeah,
Holy.
they should have done that a long time ago. But everybody keeps asking me, what's the biggest change that they should be making? It's very simple. It's blockchain, the markets, and you can't fake trades, and the trade will be under a blockchain, and there's your trade, and here's how you did it. And I don't, and I think even institutions need a blockchain how they do it, right? Oh, I watched this news piece, I did this, blockchain the whole thing, and there's no chances of any faking trades, right? So the days of Bernie Madoff will be gone, and I like that.
Yeah, and guess what? Price transparency will become much more available to the
Yes.
retail space, which levels
Yes,
the playing field.
it
As
does.
why should institutions have some sort of monopoly on seeing things first? If we're all trading, why can't we all trade on the same information, the same data, and the same price? Just an interesting comment. So holding coins, of course, could have a very short life to it, but in the world, in the currency world, I'm watching the yen, so I'm very interested to see where the yen is after that warning. 155.74. We still are up pretty decent here.
Yep.
A lot of things happening in Japan.
Yeah, for
They have
sure.
their rate. Are they going to increase rates next week? It looks like it. China, Japan, a lot of problems there. Japanese numbers. I mean, GDP dropped 0.6% all of a sudden. So now they're suddenly in a little bit of a jam, and gives argument to the new prime minister of keeping interest rates low. So this could be a rather, when the yen moves, watch out if it begins to get explosive.
What's the question mark around China and Japan? I saw China's numbers of their exports way up 6%. Now they've been able to do that. Japan seems to be nervous around China, and she's not backing down from them.
No, and to anybody who's been in the markets a long time, you have to look at that from a macro point of view. This goes back to 1940s and World War II.
Yeah.
There's a lot of bad blood out there in that world. Now, granted, most of that generation is passing, but still, there's a lot of bad blood and questions. So, when China comes into their territory or close to the airspace, and then paints a couple of the Japanese planes. Is anything going to happen? No, but the saber rattling gets a heck of a lot hotter and real. So it is something to keep an eye on. It's one of those two countries don't mess around. The United States can say, I'll give you 100% tariff if you don't knock it off. And then they sit and meet. Japan and China, that's a little bit different. I would be very careful on that one. So,
Thank you, Kim. Kim, we try to bring you the smartest guys on Wall Street, and women on Wall Street. I appreciate that comment. Hope we're
but
worth more than a cup of coffee, though, Steve Flanagan.
yeah, I hope so. But let's get back into the week, Steve. Tonight,
Yeah.
you got RBA,
Yeah.
Reserve Bank of Australia, presently at 3.6%. Now, Australia is a commodity. We use a commodity-based currency, and looking at copper, iron ore, and other commodities. So
Yeah.
there's a lot of pressure on Australia to probably stay unchanged, but watch out for a hawkish type talk here, where they may be getting into the batter's box here of looking to raise rates. Bank of
Mhm.
Canada comes in early in the morning on the 10th. So that would be Wednesday. They're at 2.25%, and they're pounding their chest right now after their just GDP number and the surge of the Canadian dollar against the United States, because the U.S. then comes in later in the afternoon and is expecting a cut of a quarter to 3.75. And then the wild card comes in on the 11th. Swiss National Bank presently at
Yeah.
0%, looking at minus
What
growth.
are the chances of them cutting underneath a zero?
I Steve, I think that you're going to have to drag them kicking and screaming for them to cut under zero. However, the economic situation is arguing for it. But I expect them to remain unchanged for this meeting. But if growth doesn't pick up, and there have, lo and behold, been some positive numbers in 24 hours out of Germany. So suddenly the patient seems to have a pulse, keeping in mind Germany's GDP is minus 0.5. And this is 2 years running where they are essentially zero on the books, but they're running negative growth. So they're
All right.
slipping deeper and deeper. So that could be very positive because of Switzerland's proximity to Europe. If Europe starts to grow, it could help them. So I expect
You
them to
think it's a
start.
domino effect here?
In Europe, that's what they're hoping for. If you even look at Jamie Dimon's comments over the weekend, Europe bureaucracy, fragmentation, and slow growth is now posing a risk, and specifically to the United States. And he is arguing that the United States needs to make sure that Europe grows. Well, we are doing that. And he did compliment the United
Hmm.
States for cutting bureaucracy. But keep in mind, the whole NATO thing, while the narrative was, the U.S. is walking away. No, it's not. We're not walking away from Europe.
No.
What we're doing is saying you need to go from 1% to 5%, like you promised. That is an enormous amount of stimulus to the defense industry of Europe,
Yeah.
which creates growth. So that is around the horn, a curveball into pushing and prodding Europe to get stronger in growth. And I think that will work in general, but I don't expect if the United States hits a 4% growth target in 26, I don't think Europe is going to get close to 2%.
Yeah, I don't
Probably.
either. I think you're totally right, Steve. I think
Yep.
they can't get to it. All right, we're at the 10 o'clock hour here. I know it's I got things to do here this morning, but Steve Flanagan, always, thank you. We'll see you right back here on Wednesday. Howard will be back tomorrow as we will both be live here from Las Vegas, Nevada. For those of you who are watching, and thank you out there, Zora, Kim, and Carlo. Appreciate that, and all the. I mean, there's a lot of people watching today. We appreciate your support for Quasar Markets. All right, for those of you, we'll see you back here live tomorrow.